Hi everyone, welcome to Chapter 12, Preparing Payroll Records. I'm going to do a quick lecture over 12-1, which is Calculating Employee Earnings. I'll try to show you some notes here on the Word document that maybe you want to pause and write down and then listen after you've done that. And then I will also show you PowerPoint so I can show you some of the documents and the calculations related to this. So let's go ahead and get started. We're going to talk really about 4 or 5 things here in section 12.1. The law surrounding earnings, the pay types, the pay periods, and then the difference between earnings and payroll, and how to do some of those calculations. So let's get started first on the Fair Labor Standards Act. This covers people in the U.S. and it says that you have to be paid for every hour that you work, and it's called wages. And certain people are exempt from that, like managers and owners and people like that that are probably salaried instead. Any hour over 40 in a week is considered overtime, and most businesses will pay you overtime if you work over 8 hours in a single day as well. So then let's talk about the wage types. So there are 4 different wage types that we want to talk about. The first one is the hourly wage, which is most likely what you guys are. And that's simply taking the number of hours you work in a week times some hourly rate, and it does include tips. The second type, which is the type I am, is considered a salary position. So doctors, lawyers, accountants, teachers, we all tend to be salaried, which means that it doesn't matter if I work 80 hours or I work 500 hours in a week, I get paid the same amount of money. The third type is considered a commission rate, and this is not as common, but all it is that if I sell $1,000 worth of product and I'm at a 10% commission rate, then I'm going to get $1,000. So I sold 10 grand, I had a commission rate of 10%, I get $1,000. And that's often paired with a salary too, so that I'm not just based on sales, but I get a fixed sum typically as well. And then the last type, which is not very common, is considered a piece rate, which car companies, some others might do something like this, that they say however many units come off the line, so I'm producing cars and we put 200 off the line that day and I get $1 for every single one that comes off the line, then I get $200 of wages that week. So the next thing that we're going to talk about is pay periods. So pay periods are the number of days or weeks covered in the paycheck itself. So if I'm paid weekly, I'm going to get 52 paychecks a year because there's 52 weeks in a year. If I'm paid bi-weekly, the second one, I'm going to get 26 paychecks a year because there are 52 weeks in a year. Getting paid every 2 weeks, that's 26 of them. Semi-monthly is just slightly different. So that's saying that I'm going to get paid twice per month. So 24 times per year, because there's 12 months in a year, twice per month, 24 times. It's typically going to be on the 15th and then the last day of the month, the 28th, 30th, 31st. And then monthly is the last one here. It's getting paid 12 times per year, and that's really pretty rare. Then we have total earnings versus payroll. So earnings versus payroll is kind of the key here. Earnings is just for an individual for a particular pay period, whereas payroll is all employees, okay? So earnings is the amount that's paid to an individual, one employee only, and it's also called gross earnings, gross pay, gross wages. You'll see it that way in problems. I'll refer to it that way. And then payroll, like I was indicating, is for all employees that are working during a specific pay period. So all employees are included in this amount. It's prepared by the payroll clerk, which is the accounting person responsible for doing that for everyone. And the device that they use to do this is a time clock. And that's a device used to record the date that you come in, your arrival, and your departure times. And I guess the key thing that I want to make sure that we know, and we'll look at a calculation, is the standard in the U.S. is that we calculate this to the nearest quarterly hour, meaning 8 o'clock, 8:15, 8:30, 8:45, 9, 9:15, 9:30, etc. Okay, and this all gets recorded on a time card. So let's make sure that you kind of understand what this means on the nearest quarterly hour. So 8, 8:15, 8:30, 8:45. That's what the start point or end point of your work time is. So the easiest way to do this, if we're on 15 minutes, is 7's kind of the key, because that's about half, 7 and a half. So we subtract 7 or add 7. So for 8 o'clock, we're talking that it would be from 7:53 until 8:07. So if I came in or left, either one, from 7:53 to 8:07, that's always going to be closer to 8 o'clock than the other time around it. For 8:15, then we would be talking about 8:08 to 8:22. So if I come in between 8:08 and 8:22, that's considered 8:15 on the time card. And then for 8:30, it's going to be 8:23 to 8:37. If I come between that time, it's as good as being 8:30. So hopefully that makes sense on how to do this. So let's take a look at this time card for John Butler. He's employee number 2, and it's for the pay period ended December 15th. And this is perforated, so they're not showing every single day in the 2-week period that we're talking about. And so what you need to know is that we're trying to compute over here on the right-hand side the hours. So regular hours, again, are every hour worked up to 8 hours in a day, and then anything over 8 is considered overtime or OT. And you will see that when I add all that up, it is my total hours of regular and overtime, which is what I'll use to compute earnings here on the next couple slides. So let's just look at real quickly the Wednesday here, this line, and it kind of makes me laugh because they screwed it up on this slide for the nearest quarter hour. So if we look at this, it's coming in at 8:05, which is closest to 8 o'clock, and then it's leaving at 12 because it's 12:03. So that's 4 hours in the morning that they worked. In the afternoon, they came back at 12:56, which is closest to 1, and then they left at 4:52. Well, 4:52 is closer to 4:45 than 5 o'clock, so it should be that they're leaving in essence in the afternoon at 4:45. But the book screwed this up, and so did this, so it's considering that 1 to 5. So 4 hours worked there, 4 in the morning. That's a total of 8 hours regular. Then they came back in the evening and worked from 6 to 8:30. Okay, so 2.5 hours. The other thing I would want to highlight on this time card is that Saturdays and Sundays are considered overtime for us in this class. Okay, so if you work on the weekend, it's overtime. And then this next slide that you, I think, have as well in your packet is just the summary by individual that the payroll clerk would print out of their time device in order to summarize what they need to do the payroll for all employees. But to compute things, and it's most important that you really do understand this part. And I would take a few notes on this sheet as I'm talking as well. So this is doing the hourly earnings for an individual employee. So first thing I need to do is I need to calculate just what they made for regular earnings. This again is for 40 hours per week. So they were apparently a semi-monthly because they worked 88 hours, no overtime during that time because it was 8 hours a day for 11 days in that pay period. So regular hours times the rate. This rate comes from the employment contract when you first started. These hours comes from the time card. I would probably write that in my notes. So 1,320. Then I calculate the overtime rate. And again, it's taking that regular rate from the employment contract times 1.5 or 1.5, because that is the traditional overtime rate that is paid in the U.S. So their overtime rate, they're getting $22.50 an hour. And we took the 6.5 hours from their time card times that overtime rate to get their overtime earnings. So add those together and I get total. So my regular earnings from up above here, my overtime earnings of 146.25, and then my total of 1466.25. That is the total earnings for that particular employee. So again, what we did in this section is we talked about the Fair Labor Standards Act on hourly wages. We talked about pay types, pay periods, and knowing the difference between those. Also earnings versus payroll. Payroll for all employees, earnings just for one. And then we looked at time cards and how to compute hours for hourly wage earners to the nearest quarter of an hour. And then we finally looked at how to actually compute the total earnings for that employee. Have a good day, you guys.